today we're going to talk about diversification, probably an overused term in financial planning, but maybe even also misunderstood. So diversification meant to inspire confidence. And as we move closer to retirement or possibly in retirement, sometimes that can be false confidence. So our goal today is to hopefully put together a plan that helps with that, if not provides you the solution for diversification.
Merit Advisors, helping improve lives by making ideal choices.
So if we think of traditional diversification, what most financial advisors have leaned into is what we think of as horizontal diversification. So think U.S. large cap, mid cap, small cap, perhaps mixing in some international equities, mixing in bonds for that uncorrelated asset. Mutual funds have been around for over 100 years, really became increasingly popular in the 80s after the creation of 401ks, and their more modern counterpart, ETFs or exchange-traded funds, really became more and more popular in the early 2000s due to their lower cost structure and ease of trading flexibility. So again, the goal today is really elaborating on not only horizontal diversification, but also a little bit of vertical diversification. Now, if we think of that horizontal diversification, we think during our careers, this can be very comforting to us, right? Providing us with some liquidity, providing us with that growth. And it's also cushioned by the fact that when we're in the middle of our careers, we're continuing to earn income. We are possibly 10 or 15 years away from retirement, so we're playing the long game. We also are, if we are contributing to our 401ks, we're dollar cost averaging into those by making monthly contributions. So any market conditions like volatility, like corrections in the market, or possibly even bear markets are cushioned by the fact that we have years of planning ahead of us. As we roll into retirement, those same market challenges, volatility, corrections, and bear markets are really felt a lot different, feel a lot different in retirement. They can cause anxiety, they can cause stress, which leads to making bad decisions, and sometimes ill-timed bad decisions can compound losses, especially in retirement. And so what we're going to talk about today is something that pension fund managers and endowment fund managers have known for years. And again, that's vertical diversification, and we're really going to introduce it by way of a fiscal house. So we're going to borrow a page out of the playbook of the ultra wealthy and apply it to our own unique retirement plan. Because at the end of the day, we really want to think of our retirement assets, what we've worked hard to save up for in retirement, as our own personal endowment. So let's walk through this together. We want, ultimately in retirement, we want our retirement assets to provide us with some safety from downside risk. We want them to provide us with income, and we want them to provide us with growth. Growth so that we can hopefully outpace inflation. So let's walk through these together. If we were to build our home, we would have foundation, we would have walls, and we would have a roof. The foundation of our fiscal house is really for those investment vehicles that provide us safety. Now, if we went to a bank, they might suggest CDs. If we went to the government, they would suggest treasury bonds. If we went to an insurance company, they might talk to us about fixed annuities. If the foundation is for safety and the roof is the opposite, then the roof is for our risk assets or our growth assets. And most of us think of stocks. I mentioned mutual funds and ETFs earlier. And the opposite of a fixed annuity would be a variable annuity. And then we also have the walls. of our fiscal house. And this is for uncorrelated assets, assets that might move differently than those that are in the roof. Many of the families that we work with have real estate, whether that's investment real estate, whether that's rental properties, those types of vehicles. Those would all be in the walls of our fiscal house. We may have bonds that are in this part of our portfolio. Again, we're thinking of things that are uncorrelated to the market, to the stocks that are in the roof. We may have dividend paying stocks, right? We may also think about having some private equity in the walls of our fiscal house. And all of these elements really together, horizontal diversification and vertical diversification, provide us that safety, that peace of mind that we have protection from the downside, that we have income to provide for our retirement, and that we have growth to ultimately offset the ever-increasing taxes and healthcare costs and just general inflation that we all experience as we go through retirement. So when we talk to the families that we work with, a lot of times they're asking us, how is my portfolio going to perform? What is it going to do during these markets? And so that's what we help them define. So we can stress test their portfolio. We can also give them a risk to reward GPA, or grade point average, if you will, that lets them know, based on the level of risk we're taking in our investment portfolio, are we being rewarded for that level of risk? And at the end of the day, that's what we do to help give our clients confidence and peace of mind as they go through their retirement.
If you have a question about what we discussed today, or you'd like to speak personally about your unique situation, please give us a call or shoot us an email. We'd love to hear from you.